Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Shawn Flynn of TechCode. Shawn, thank you for joining us.
Oh, thank you. It's my honor.
So what was your background before you started investing in early stage companies?
So I lived in China for about 5 years. There I started 3 companies. 2 failed, 1 did pretty good. My partner bought me out. I came back to the US. I'd grown up outside of Silicon Valley, about an hour drive from here. So it just kind of made sense to, when I came back to the US, to kind of find my way to Silicon Valley. And then from there, just the normal adventure for someone that comes here. Started working at a startup and sales. Then I did business broking for a little bit, which led me to make some contacts. And from that, met a lot of people at an angel group here in Silicon Valley. And I started just volunteering. But then after a while, I worked my way up to the investment director of the angel group, where I'd look at about 100 companies a month and filter that down to 10 to 15 to bring in for screening. And then from that, 6 to 7 to actually present to the members. And then from that, I got recruited by the company I'm at today, which is TechCode here in Sunnyvale right now, to work with them and kind of bring in companies for them to look at. So my role right now is business development role, where I'm bringing companies in for us to screen, look at, and take to the next level. And hopefully our investment arm in China will really like what they see and write a check. So that's kind of my path, my journey here.
Great. You've seen a lot of startups come through. For those investors who are listening to the show, what's your advice for them about investing in startups, especially those who are just now beginning their career in startup investing?
I think for the first few months that you're looking at startups, I would say even the first 6 months or so, when you join an angel group or first build that network where you can ask questions. But at the very beginning, don't get overexcited. And what I mean by that is, one of the things I noticed with a lot of the new members with the angel group, and even now when I see people come to our location and start going to the events, they get very excited that first month, first 2-3 months. And they will find a few companies that they like their pitch, they like the founder, they'll write a check. And then those companies will, as most startups do, they'll close doors, they'll get frustrated. They won't invest again. They'll just go on, do something else. Whereas some other investors I've met, they really take that first 6 months, year, hear a bunch of companies, get familiar with the ecosystem, ask a lot of questions, and then they write their first check. And then actually they start writing their second, third, and they build that portfolio. That other example I gave, where the person might write 2-3 big checks and they get frustrated and just quit. But they're involved. They're really looking at the ecosystem. They've seen some deals go by that they passed, that they regret, but now they really know what they want. And they've seen enough of companies to really get an idea of valuations, what they can get for their money, the startups, the founders that stick around. So my advice for that early first-time investor, that angel investor, is to not jump in the water, just kind of poke your toe in a little bit, but have that mindset of long-term.
Great. That's good advice. So you've seen the venture market grow and change over the past years, and it continues to do so. How do you see the industry evolving in the next 5 years for venture capital and venture funding?
Oh, wow. That's a great question. Over the next 5 years, I see some changes, especially in Silicon Valley. So right now, over the last few years, I saw a lot of overseas investors come here. The valuations sometimes were better. The startups were better. Just a lot of reasons to be here. But I'm seeing more and more of these companies overseas really grow and develop and get their business models more fine-tuned before coming here, and actually coming here with bigger companies. I see in the future, I mean, unless you're asking about what technology specifically I see taking over the next couple of years, the change I see in the ecosystem is more overseas companies being further along before they try to enter the Silicon Valley market. I also see governments giving more support to the companies, whether it's European governments or Asia, or just being more involved, creating more programs that they can either match fund in, or more incubators or more local support to really help them, especially with over time. I mean, one advantage Silicon Valley has had versus many other places was the mentors, the advisors here, and all their experience. Whereas these other markets, they just didn't have that local talent or that local experience because maybe their entrepreneurs were first timers that had successes, where here you'll have entrepreneurs that have had 3-4 exits. But now that they have more experience, they can really give more coaching to those startups. So I see a lot. Not even sure how to say it. Don't want to say an more equal playing field, but more opportunity for overseas startups to grow and have a chance. I guess that's what I do see in the future. A lot more support, a lot more resources outside of Silicon Valley for other companies in other areas.
It certainly seems like venture capital is going out and wide as far as number of VCs out there. There's now micro VCs and nano VCs, and number of models. There's now accelerator programs. There's venture studio programs, and there's just about every place has some level of funding going on. It may not be as deep and rich as in the West Coast, East Coast, but it's certainly available. And I had an interview with an international VC a while back that said there's as many unicorns coming out of Europe as there is the U.S. Had a chance to fact check that, but to think about that much activity going on around the world shows that it's really going far and wide at this point. So what do you think the impact of that's going to be on funding deals and putting deals together? If you go anywhere to get funding, or you get a little bit in a lot of different places, what impact do you think that's going to have on startups?
I think they'll have more choices where they can set up their operations for sure. I also think that they'll have more local resources, especially with the governments supporting them. And then with that, I mean, VCs will have two things in angels. They'll have more competitions for deals, but the deals that they're in, I think they'll have a higher chance of getting a return or a higher multiple on what they put in based on different organizations and groups matching funding. So there are some great programs, such as in Korea, I believe Poland as well, where the government matches funding, but they don't take any of the upside. So if you put in 100,000 here in Silicon Valley, the government will match that. Now the startup has 200,000, but on that exit, that everyone's competing for those companies, more competition, but with more of these government or local incentive programs, you can get a bigger win. So more safe, higher multiple on your investment.
Well, very good. So what is your investment thesis for funding startups? What do you look for, and what are your requirements to fund a startup?
So the former angel group I was at, the investment thesis was pretty clear. It was they had to have an office within driving distance of Silicon Valley. Pre-seed to A round, the founder had to be very likable. That was actually the first thing, was the founder likable and coachable. And then the sector was kind of agnostic. And with that, a lot of those traits have been kind of pulled over to the location I'm at right now. And when we look at companies, I mean, we really look for that coachable founder. We really look for that early stage company that we can help grow. But the biggest thing for us is we're really looking for a company that wants to enter the Chinese market within the next year or two, or we feel their product will do really well in the Chinese market. I mean, our headquarters in Beijing, we're backed by one of the largest land development companies in China. So, I mean, our motto is we have resources there that can help companies. So we want to leverage that because, as mentioned earlier, there's so much competition from VCs and angels for those good companies, those ones you want. So what separates us from them is the connections, the network. That's the value we add, but we want that company we feel will grow in overseas markets that we can help and work with.
And are there a couple of examples, maybe one or two portfolios that you think fit that thesis very well? Just a couple of startups that meet that.
So we are very young, but we've helped a few companies actually come from China here, such as TouchPal. They're a Chinese unicorn company. We helped them set up their U.S. operations, their office here. It's an emoji app company, but as funny as that sounds, if you just think of a keyboard with emojis, it has 100 million downloads. So, I mean, that was a success case. But going from here to China, some of the companies that we've worked with, Cocoon Cam, they're growing. I think they're at their A round now, going to B. SKU Chain's in our facility as well. The companies themselves, I mean, we monitor, and it's one of those things where it's the parent company's investment arm would later on look for the investment. So a lot of the companies we may have not made a financial investment in, but we've put in time and human capital and resources to kind of cultivate, to guide, to look at, to monitor. So later on, when they are at that stage, a sizable check could be written.
That sounds great. So as you look at these startups that are coming up now, what are the current challenges that they face? Is it regulatory? Is it the market? Is it technical challenges? What do you think is the key hill they have to climb to win the race there?
I mean, for us right now, the biggest obstacle is regulations, the uncertainty, what's going on, the governments in the news. You'd be surprised how just a tweet can really change how businesses run. Actually, I guess no one's surprised by that. But it's just the uncertainty. I mean, startups right now, a lot of them are kind of worried, hesitant to take money from investors overseas, Chinese investors, with CFIUS and some other regulations. They're uncertain about, okay, if we invest in something there in China, can we get the money out? Can we bring it back here? Investors are kind of concerned, well, if the market's in China for this company and we're here and we invest and the money's there, will it ever come back? There's just a lot of uncertainty that both the investors and the startups have, which kind of just lead to maybe not action being taken, just wait in. Yeah, so there's a lot of uncertainty for that, and that's playing a big part in things.
Well, that's great. Well, you see a lot of different applications and sectors and subsectors out there in your job. Where do you see maybe the immediate opportunities are for the best 2 or 3 sectors that you think we should be pursuing today?
Fintech. I think fintech has a lot of opportunity in the next few years to disrupt. And I mean, the banking system right now has a learning as we go, but I'm seeing some things right now that I think can really make a difference in our lives. So I would say fintech is going to be huge in the coming years. With that, blockchain and IoT, I'm actually really excited about the combination of using blockchain, IoT, and AI, artificial intelligence. Companies that are working with that, especially with the trade and just the goods being moved. That's really exciting me.
That sounds great. Those sound like very good opportunities. In the last few minutes that we have here, what else should we cover that we haven't?
I would say some strategy, I guess, maybe on the startups to find investors and angel groups. A couple things I've noticed a lot, and maybe this has been talked about in the past, is kind of the anticipation of startups when they first raise funding. What we see a lot is they'll come here and they'll go, oh, I just started raise funding. I think I'll close in the next month or 2, and I want to get back to my company, where in reality, it'll take them 6 months to get the capital that they want, that precede that A round, that it takes time, and that from 6 months, even a year before they even think about raising capital, to build that network. There's a term that they say, feed an army for a year to use for a day. I would recommend that for any entrepreneur looking to raise funding. Build that network from day one of angels, investors, incubators, accelerators, all these people in this network that you can go to, build a good relationship with, so that 6 months, a year down the line, when your company is ready to raise funding, you have that network that you can reach out to, that you can make those contacts, that they're warm contacts, you have a good relationship, they can give you advice, they can give help. Now, I don't know, Hall, what has been your experience with early stage companies in the fundraising process?
I think the key there is you have to demonstrate a growth story. What I tell companies that are coming to me is you can't just forecast a great story, you must demonstrate it, because that's what investors are looking for, is that you're hitting your milestones, things are clicking up and to the right with sales, team, product, and fundraise. The key there is most people come in with a deck full of promises and forecasts, but they often don't bring enough to validate the market or the product to show that they're really on their way to doing it. And I found, to your point, you go to an angel group, they tell you don't invest for the first 3 months, is that in that time, you should be looking at deals over a period of time to see if you can put enough dots together to connect a line to see if they really are making progress with it and to do that. And that's one thing we try to help people with, is to go back and give investors updates, because if you don't, then they assume you didn't make it, when in fact you may have. And so you have to demonstrate the growth story to win the funding. And it takes time, because at heart, you're also building a little bit of a relationship too, which doesn't happen in an instant. And so people come and think they're going to pick up their money in 30 days. That's usually an unrealistic expectation for sure.
I couldn't say it better myself. That was perfect. That was amazing.
Great. I've had plenty of practice telling that story myself. So you get good at it after a while, but it's also a hard lesson to understand as well. Venture funding is not debt funding. And I think some people think, well, I'm just here to pick up money. Yeah, where's my check? And it's really not that way. Venture's got a lot of things they have to check mark before they give it to you. And so it's something for new people to understand. People who've been in the industry for a while and have raised money usually appreciate the work and the challenge that's ahead of them for that as well. But it's been great talking with you today. How best for listeners to get back in touch with you?
The best way to reach me is through my email. That would be shawn.techcode@gmail.com. Shawn, SHAWN .techcode@gmail.com. Or just find me on LinkedIn at Shawn Flynn. Flynn spelled FLYNN. And no, thank you. This has been an amazing opportunity.
Great. Well, thanks for joining us, and hope to have you back for a follow-up soon. Appreciate your taking time.
Thank you, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.